Hi everyone, my name is Sam DeCourt and welcome to our September market update. Joining us today is PiFund's Chief Investment Officer Mike Taylor, and joining us from Sydney, Mike Ross, who is Portfolio Manager of the Australasian Dividend Growth Fund. We'll start with you, Mike Taylor. What's been happening in markets over the past month or so?
Well, September has so far surprised me and I guess others a little bit to the upside. Markets have continued on the bull run with a number of markets making new highs throughout the month.
It does certainly seem like one-way traffic. Mike Ross, or Roscoe as we call you affectionately in the office, the Australasian funds have had quite an incredible run to the end of August, returns between 22 and nearly 50%. Can this keep on going, or are things getting a little bit overbought, a little bit too frothy over in Australia?
It's a good question, Sam. Well, I mean, our view on the market, and my view, is based on the companies I'm looking at every day, their prospects for growing earnings, because ultimately earnings growth will drive share prices over time. And it's a pretty fertile environment. We're finding a lot of opportunities at the moment. And the other thing is, look, so we tend to take more of a bottom-up kind of view of the portfolio in kind of, forecasting what our returns might be in the future. From a top-down perspective, you're right, the market's been incredibly strong. Will that continue? Look, there's arguments both ways. We've had some rate cuts in Australia. Obviously, you have in New Zealand as well. And so you would expect that at the beginning of an economic expansion, if that were to occur, valuations might look expensive at that point. I don't really try and forecast short-term moves in markets. I think that's a mug's game. As I mentioned, the focus is on the companies we own and their prospects for earnings growth, and things look pretty exciting at the moment.
And Mike, the Australasian Dividend Growth Fund that you've managed for many, many years, we put a note out to clients a week or so ago about how this fund is going to close to new money. Not close, but close to new money to keep its size small. Can you maybe just briefly explain why we're doing this?
Yeah, sure. So essentially what we're trying to do here is maximize our investor returns going forward by limiting the size of the fund. As a reminder, the fund invests in smaller and mid-size Australia and New Zealand listed companies. And so the opportunities we're often seeking are kind of under the radar, and liquidity and agility become factors. So this move is all about maximizing the prospects for returns going forward.
Thank you. Back to you, Mike Taylor. One of your LinkedIn posts that I saw a week or so ago, you put up a chart showing 4 big indices: S&P, NASDAQ, Dow, and the Russell being the US small cap index. All 4 of them reaching new highs for the first time in about 4 years. What was the purpose of that post, and what's the significance? What does it mean?
Well, I guess the main thing it means is now all those markets are in a bull market, and the small cap market, or the Russell, which is probably the one that's probably most familiar for investors of PiFunds, it's just overtaken the highs from the COVID boom in 2021. So for us, it's quite significant, and also for investors who've been in US small caps since 2021 returns, and it's been quite difficult, to say the least, over that time period. So it's great to see the market back at new highs. It doesn't mean it's going to instantly race higher. I think what we can probably say at this particular point, after such a strong run for the last 6 months, is the market probably needs a breather, a pause. Lots of commentators are calling for that, not just me. So it wouldn't surprise me for the market to have a bit of a pause. Now, for investors at this point, after such a strong run, even a 3% pullback will probably feel quite scary, but it's not. These things are absolutely normal. They happen all the time, every year in markets. So when markets do pull back, because they will, 3%, 5%, 8%, don't worry. This is exactly what happens every year, all the time. And from our perspective, we do not see anything on the horizon that is concerning us or gives us cause to adjust our cash levels Of course, there's always things that can come out of the blue, but currently at the moment, as Mike Ross alluded to, we're actually pretty positive still.
All right, very good. Thank you, Mike, and thank you, Mike, and thank you all very much for tuning in, and we'll see you next month.
Thanks, Sam.
Thanks, guys.